Good morning, this is Connor from 0DTE Traders here to present our market minute for October 4th, 2024. It is 10:40 and the SPX is trading higher, up 0.2%, 257.08. Now, we did have a large gap up here this morning in response to a better than expected non-farm payrolls report, but as anticipated, it did not hold. It got sold into, opening just below major resistance at 57.50, which is also ES 5800, right? That adds significance on a double cycle high, 5-minute, 15-minute overbought. So this is a short setup as per our process. We sold calls structured at the all-time high of 57.70. This is a 5-wide call credit spread, in for 60, out for about 50. Real quick trade, about an hour in duration. Now, I did enter technically in the pre-market at 9 o'clock, although there was no difference in premium from the open. So if you took the trade at the open, 30 minutes, already out. We got that gap fill and reversion to the big 5,700 handle. Despite the better than expected non-farms report, there is still a lot of uncertainty on the geopolitical front, which is taking center stage. Our view, which we released here in our morning market report, is even if non-farms data initially triggers the short volatility trade and an upside squeeze, that there may be a rebid due to weakened risks. Additionally, the highest ever weekly SPX close is 57.38 for the week ending September 25th. And this just adds significance to that 57.50 zone, which will likely entice short call traders. I'm sure we were not the only ones shorting calls here this morning. To add further conviction, we conducted a poll in the early morning within our Discord. Does SPX make a new all-time high today over 57.67? And it was unanimous, no at 100%. And I honestly don't recall the last time consensus was wrong. Yesterday, we also had a poll. Does SPX close above or below 570? So that is the critical SPY 570, which is SPX 5720 equivalent. And it was also unanimous, no at 100%. Now, of course, there's not always consensus, but when there is, it generally plays out, which just adds conviction to your trade, the importance of trading with like-minded traders. Popping back over to the SPX chart, this is the 5-minute time frame, and we are seeing a bounce here. This is known as gap fill reversal, 5-minute cycle low, support zone here, or you can say more the transition, not really strong support or strong resistance. But these setups tend to play out quite well. A lot of participants trade gaps. It is a logical downside target for those that, in this case, shorted the gap fill. And a lot of participants look at this, for a market bounce, which has played out here. First target is always back to the first gamma level. In this case, 57.25. A break does open the door back up to high of day, and then 57.50. A break of high of day would imply continuation to the upside, although it doesn't look like we're going to see that here today. We are nearing, could be a bit of a short setup here. Target would be back to low of day. A break of low of day would imply continuation, and if we just zoom out here, the market has loved this 5,700 strike. It is essentially the transition from a positive market, right? Positive gamma market trading above, negative gamma market trading below. And we've been trading reversion essentially the past 3 trading sessions, playing this upper bound short, playing this lower bound long, looking for pins, iron condors centered around this transition. And it looks like we're heading back there today with the possibility of another pin in that region. Just to give you a different visual, 5,700 is that transition. Technically 56.95, that is the flip. But this is where dealer positioning is neutral. The best way to think about this is that it's a balanced market in terms of calls to puts. So the bulls nor the bears are in control. And we can see that on the gamma index. We've been trading neutral for the past 3 trading sessions. Now we're looking at 2 key levels here, 57.50 on the upside. If bulls can get a close above, we will start to see some material positive gamma and supportive flows re-enter the market. Conversely, a break of that lower bound of 56.70, we'll start to see some material negative gamma, and the bears would gain control, and it could get real ugly on the downside. So essentially, the market is just hanging on by a thread here, very neutral in terms of positioning, waiting for more news on the geopolitical front. Lastly, let's conduct a quick performance check. I am green on the week, up $6,240, 14 trades, 12 winners, 1 loser, 1 flat. I was very active this week. Primary reason is because there's no trend in the market. So it's not like you can buy a long call or long put and just kind of hold it all day. When you get a lot of mean reversion chop, it generally pays to be a little bit more active. I sold quite a bit of credit spreads this week on the call side and the put side, centered around or playing that reversion to 5,700. Additionally, long puts, long calls. I did have one big winner here, long put, 1,100% ROI. This was in response to the weakness sparked by Powell on Monday. Very good momentum trade to the downside. Also on this day, I did take a long call play, which ended up being a loser here, 60% ROI. Now, this was my only loser on the week, and it could have been a very big winner, 1,000% ROI, but my timing wasn't great. I entered too soon, and I technically had a setup or an indication to exit as per my process. I followed it, but if I would have been patient, those quarter-end flows on Monday sparked that huge rally, which would have been a big payout. But it is what it is. Things are not going to be perfect. Overall, good week. A lot of uncertainty going into next week, and perhaps we'll get a little bit more directional volatility one way or the other. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.